Hello students, again we are continuing our monetary measures to control the credit. In the last lecture we have done qualitative measures. Now we would be doing qualitative instruments or qualitative measures. When we talk about qualitative measures, those measures which deals with the quality of the credit given, or we can say those measures which deal with which sector would be getting more credit during the period of inflation and deflation. The first measure is margin requirement. Margin requirement, I'll make it clear with the help of an example. Suppose students, you take a loan from the bank. It is mandatory for you to give something as a security to the bank. We have to mortgage some of our assets to the bank to get loan. Now, suppose you mortgage your house which worth 10 lakh rupees. You will never be getting the loan equal to 10 lakh. You would be getting loan less than the asset you have mortgaged. You might be getting 7 lakh. If you are getting 7 lakh as a loan, then 10 lakh minus 7 lakh equal to 3 lakh is your margin requirement. So margin requirement is the difference between the asset mortgage, the value of the asset mortgage is 10 lakh, and the loan taken is 7 lakh. So the margin requirement is difference between asset mortgage and amount of loan taken, that we are saying 3 lakh. So this is what we call the margin requirement. Hope so margin requirement is clear. Now whenever the banks or the central bank say that it is a condition of inflation and the need of money, circulation in the economy needs to be reduced. Supply of money in the economy needs to be reduced. Then what it will do? It will raise the margin requirement. For example, if it was 3 lakh earlier and 7 lakh is given as loan, now the margin requirement may be raised to 4 lakh. Now if margin requirement is 4 lakh, only 6 lakh can be given in the form of loan. 10 lakh minus 4 lakh as a margin requirement, and how much is given as loan? 6 lakh. It means that we have to increase the margin requirement so that the supply of money is lowered. In case of deflation, when more loans need to be offered or more money supply is needed in the economy, then the margin requirement is reduced. Suppose in case of deflation, the margin requirement from 3 lakh is reduced to 2 lakh. Now the banks will be able to give loan of how much amount? 8 lakh. So the money circulation can be increased by reducing the margin requirement and decreased by increasing the margin requirement. Our next point is rationing of credit. Rationing, all of you know that a particular quota is to be given. When we talk about ration, all of you had heard about the rations, that particular quotas are given to the BPL families in the form of ration. Similarly, the rationing of credit is done. The central bank fixes the quotas for the different business activities, for production activities, for consumption activities, for speculation activities, commercial activities. For all type of activities, the quotas are fixed, and the commercial banks cannot exceed those granted quotas. They can give that much percentage in the form of loan, which is being decided by the central bank. This is done mainly to check the speculative activities in the economy, that speculation is not done. What do you mean by speculation? Speculation means gambling activities should not be done in the economy. So the third point of qualitative measurement or qualitative instrument is moral suasion. If we say moral suasion means that central bank instructs or give directions to the commercial banks that it is a time of inflation, please do not lend more money to the public on the moral grounds. The commercial bank agrees. Similarly, in case of deflation, it says to the commercial bank that you should be providing more loans to the public, and commercial bank agrees. Moral suasion means all the commercial banks are working under the RBI, so it is their moral duty to follow its instructions. In that case, RBI can restrict loans or make the loans liberal to deal with the situation of inflation or deflation. So that is a lending the loans more liberal or lending the loans in the restricted forms by the commercial bank on instructions given by the central bank. During the time of inflation, the loans are restricted, and during the time of deflation, the loans are made liberal. So, dear students, just go through these notes, learn them properly, write on your notebook. We would be meeting again for the last part of banking chapter.